Hello friends, myself Pawan Jaiswal from MarketSmith India, and you can see the that client user interface of our website, that MarketSmith India. If you log in www.tradersmith.in, so you will find this kind of interface, and then you can explore various trades, like current trades, past trades, pricing and everything, and performance and everything. So just I request you to go there and that's fine. So now this objective of the recording is to how just we are trying to discuss how market is currently placed at current point of time, and mid of June, that mid of July 2025, market is showing some volatility from the past couple of weeks. So first of all, if you see that how it is placed as per O'Neill methodology of market direction market, so you can see here that as per O'Neill methodology of market direction, uh, benchmark index as well as major sectoral indices are trending into confirmed uptrend. Confirmed uptrend means clear cut up bullish trend. But apart from that, few of indices like IT, mid cap 100, and auto is showing, FMCG is showing uptrend under pressure. Uptrend under the pressures means we are witnessing elevated number of distribution days, maybe more than at least five, or either 50 DMA breach. And because of that, we have downgraded the market that uptrend under pressure. That means market is that indices are in bullish, but it is facing some sort of you know resistance as well as selling pressure at higher level. So let's move on chart directly and let's see how it is placed technically. So this is the first Nifty 50 chart. If you see here, Nifty 50 is currently from the last 2 3 months, it is clearly trending with higher top higher bottom formation, no doubt. But now from the last couple of weeks, it is facing some sort of resistance around 25,000. 700, and now witnessing some volatility and facing and falling, and on Friday trading session it has already breached 21 DMA and it is standing below that. Now sorry, now from now onward, this 25,000 is a psychological level that is to watch, and that 50 DMA is also placed in that range, 20 that 25,900, 25,000. So that is why we are saying 25,000 as well as 24,900 is a critical level to watch, because 50 DMA is placed, and then this upward trending line is also placed in that particular range. So that is the critical to watch. So just keep watching. If it will breach below that, then only we will expect more volatility or more negativity in coming days. Otherwise, possibilities are still there that index will take support around 25,000, 24,900 zone in coming days, and it will bounce back toward 25,600, 25,700. So currently there are two a view on index Nifty 50, if it will remain trending and holding about 24,900, 2,500. So range is 25,000 roughly plus minus 100 point to 25,600, 700 roughly 100 point plus minus. And suppose it will breach that 24,900 or 25,000 decisively. So maybe we can expect that last month low, that is around 24,400, 24,500. That is another round of strong support. And suppose it will breach, then maybe 24,000 also, but that is the little bit medium term high time horizon. If we talk about next couple, next 4 5 trading session or next week point of view, so this 25,000 or 50 DMA, the 24,900, 500 zone is a level to watch. If it will breach, so we can expect 24,500 kind of zone. And if it will hold above that and bounce back above that, so we can expect range of 25,000 to 25,600 plus minus 100 point in Nifty 50. Apart from this Nifty 50, if I talk about other major sectoral indices, then Bank Nifty. So Bank Nifty is clearly outperforming from the last few months. It is still trending in uncharted trajectory, but yes, from the last few days again, Bank Nifty is also facing resistance. And however, it has not breached 21 DMA, but possibilities are there that it may breach. But again, in this also, suppose it will breach 50, 21 DMA, and 21 DMA is placed around 56,700 zone, then maybe next leg of support is placed around 56,000 or 55,900, that is 50 DMA. Apart from that, if I talk about this trend line and other technical parameters, so other technical parameters also indicates this range of support. If I draw a line from here, one second. If I draw a line from this closing low to this level. So maybe that support is also placed in more or less in 50 DMA, or I can say 55,000 zone, 56,000 zone. So that is why I'm saying 56,000 is a 56,000, 55,900 point range is a critical to support. It will breach, then only we can expect more negativity in coming days. Otherwise, possibilities are bounce back. Maybe they are taking support around 21 DMA, followed by 26,000, 56,000 kind of level. Apart from again this major index, that is Nifty 50, and next is that Nifty IT. If we see the overall placement of Nifty IT index, so now after this TCS Q1 earning, this IT stocks as well as this index started trending volatile. And if you see the overall this price structure of this IT index, so that is not looking that much attractive. And now we can say that after this fall, especially, we can say that this was the gain. This was the gain happened in last 2 3 months. That was the corrective rally in the nature. And from now onward, unless and until it will not cross roughly 40,000 kind of zone, we will not consider bullish trend. 40,000 roughly plus minus 500. So that is the level, and the way now it is falling, especially with gap down opening up to TCS numbers, and majority of the IT stocks are not doing good at current moment of time. So I can say that maybe negativity may extend further in coming days in this particular index. Further, this index has breached 21 DMA as well as an overall placement of moving average like 50 and 100. 21 DMA is trending below 8, so maybe negativity is there, and maybe this negativity may remain in continuation in coming days also. If I talk about support point of view, the 56,000, 36,500 roughly is a support, first leg of support, followed by 36,000. So most probably next, at least next 4 5 trading session point of view, it will take support around 36,500, 36,000 zone. If it will breach that level, then only we will consider more negativity. But as you know that numbers are due, that Q1 numbers are due, and market is taking trigger from that numbers, apart from other macro factors like interest rate and everything. But especially this IT is taking trigger from this global geopolitical activities like trade tariff, and then numbers, at least whatever number is available in front of us, declared number, that especially TCS and all, that is not giving good sign. So maybe this index may remain traded in volatile manner in coming few days and few weeks points of view. Apart from that, this IT FMCG, so FMCG is regaining its little bit of momentum, but you can see this black color line, that is 200 DMA. It is still trending below 200 DMA, and another is this pivot level, which is currently placed around 52,200, sorry, 58,200, 58,300. Unless and until it will not cross that level, it will remain in sideways and volatile in chopping. But the day it will cross 58,000, 58,200, maybe fresh bullish trend will start in FMCG index. Otherwise, it will remain traded in sideways. Auto is again trend was gaining momentum, but again it has entered into consolidation zone, and that consolidation zone is roughly 23,000 to 24,000 plus minus 200 points, and currently it is still trending in that way. Either side breakout or breakdown may lead this index in that particular direction. If we talk about next couple of weeks point of view, so overall trend and sentiment is sideways, and most probably the way numbers are coming and the things are developing, most probably it may take further consolidation, and it may remain in consolidation sideways in the broader range of 23 to 24,000 plus minus 200. Metal is clearly gaining momentum, but yes, it is not, it is bullish, no doubt at all, trending above all key moving averages. Overall structure is bullish, like low high top, higher bottom formation. But in terms of level point of view from the current level, uh, so I'm not expecting any very exciting kind of return in this space in terms of rate stock as well as in terms of this index. But yes, broadly, what I assume that from current level that is placed around 9200 zone. Broadly, I'm expecting that most probably it will remain traded in the sideways zone, and that sideways zone is roughly 9000 in downside and roughly 97,000 kind of zone in upside. And we are assuming that it will remain traded in that range, that 9000 to 9700 in next couple of view point of view. Apart from realty is clear cut was outperformed in last couple of months, but now it is again in showing profit booking, but the structure is still bullish. Maybe currently I can it's too early to comment, but one thing I can observe here on reality index, because this is the rate sensitive sector, and rates are now going down. IBI has surprisingly reduced 50 basis point rate cut, and their CRR cut, liquidity push and all. So maybe this sector is looking quite attractive from the next 6 to 12 month point of view, obviously, no doubt. But currently it is in a like some profit booking or bullish like a corrective kind of rally. And after considering this rally that is happening, that is in process of formation of continuous bullish trend, continuous bullish flag continuation pattern. But it is too early to comment. Unless and until it will not give flag breakout, we will not consider it as a bullish flag. But yes, it is in process of that. So maybe in next couple of weeks would be quite crucial, that whether it is forming this pattern and then breakout or not. So maybe next couple of weeks or next 2 to 3 weeks is quite crucial for this reality index also, at least in technical terms of view, technicals point of view. Otherwise, this sector is this rate sensitive, so maybe overall well placed, no doubt at all. But maybe it will remain traded consolidation, and the moment on the day it will give a strong breakout about this flag pattern. So maybe we can say that beginning of the new bullish trend. But currently, obviously, it is showing lackluster, some profit booking, and that is forming a little bit of corrective kind of rally. Apart from this reality, one or two sector that I would like to discuss with you, that is energy. Energy is showing little bit of laggardness, but yes, gradually it is improving. But don't know now it is a strong resistance around 37,000. So maybe the way it is behaving and the way market is behaving, maybe it will remain traded in the broad range of roughly 34,000 to 37,000. So maybe it will remain, this index will also remain traded in sideways or like consolidation kind of zone in next couple of weeks point of view. Next is pharma. So pharma is gaining its momentum. If you see the structure, so structure is bullish, obviously, like higher top, higher bottom formation. Now it has reclaimed 200 DMA trending above that. Only thing is that we are waiting for that little bit of more positive trend, that is 50 DMA as well as the 200 DMA, that a golden crossover. It is yet to come. But the way it is gaining, especially in the this domestic facing. So pharma is showing kind of mixed pictures at current point of time. Like one is global facing, so because of this trade tariff and everything, pharma is showing like sideways kind of thing or some consolidation or choppy thing. But at the same time, the domestic facing pharma and API based pharma companies are really doing good, and because of that, this index is also gradually doing in that way. So what I would suggest, you can focus in that domestic facing pharma companies or API driven or API manufacturing companies in pharma space. Otherwise, at least in terms of index point of view, if I talk about range, so roughly 21,000 to 23,000 is a broad range, and the moment that the day it will give breakout over 23,000, we can expect further upside toward 24,000. But currently it is in sideways with little bit of positive bias, no doubt at all. So overall trend I can shared with you here, and that is from the next 1 to 2 weeks point of view. Just stay tuned with us. I think that's it for now in this particular video, and stay tuned with us. Maybe we will come again with you via again a new recording regarding market and market analysis, including benchmark index and sectoral index. Thank you. Thanks for watching this video.